Let's talk more about that and other big macro market issues with Kathryn Rooney Vera. She is an emerging markets expert and chief market strategist at Stone X. I know this is all in dollar terms in the ETF, so don't come at me with that, Kathryn. I get it. But hey, how are you surprised? How surprised are you that, Mexico and Greece and even little old Ireland, my people, are doing so well?
Yes, our people. Even Argentina, which is a serial defaulter, is doing fantastically. Emerging markets are in vogue. And the reason, Brian, is because it's risk on, right? The Fed is staying on hold. It's unlikely to continue to raise rates. The dollar is weakening. So emerging markets are looking really good. And emerging markets, remember, Brian, they were ahead of the Fed. They hiked rates. Brazil hiked rates more than 1,000 basis points and curbed inflation. I mean, curbing inflation for them is different from curbing inflation for developed countries, but they definitely got it under control. And now they're kicking off the rate cutting cycle. So they're certainly ahead of the Fed in terms of monetary tightening, and yields look attractive, especially in this risk-on environment.
Yeah, amazing. Greece has done so well. Coming home stateside, Kathryn, I want to get your take on this. They got a GDP estimate, it's just an estimate from the Atlanta Federal Reserve. They've got this thing called GDP Now, and that tool, it's an online tool, predicts GDP growth in America of 4.1% in the third quarter. That is bold. That is big. Do you buy it?
That is shocking. And if it's the case, then, Brian, there is no chance, and I'll go as far as to say there is no chance that the Fed gets to a 2% target in the immediate term, with an economy that's overwhelmingly service-based in inflation, with a core PCE that's overwhelmingly driven by service inflation. So we have a combination of near record low unemployment, remarkably strong economic growth, consumer confidence that's bursting. So the misery index is plummeting. You have real wages positive and trending higher. So that, to me, says the economy is doing very well. We're not in recession. We're not on the cusp of recession, not with the labor market this strong. Mm-hmm. The Fed is going to have to make a tough decision, Brian, in my view, in 2024. They're going to have to break something to get to the 2% inflation target, which is their target, arbitrary as it might be, or they're going to have to change the target or cut before reaching said target, which calls into play and puts into jeopardy expectations.
Big, bold prediction, and you say no chance. Kathryn Rooney Vera, appreciate it. Have a great night. Thank you.
Thank you, sir.